Hi everyone, welcome to another episode of the Mizuho Week Ahead. I am Xing-Yi, market economist at Mizuho Bank. The theme for this week is Risk, Review and Mask. It was a volatile week for US Treasuries last week. UST yields jumped midweek amid worries about the US swelling debt test, with anxiety being amplified after Moody's ratings downgrade the prior week. While UST yields subsequently moved lower as the passing of Trump's bills with higher debt ceiling limits in the House provided partial relief for potential defaults, the narrow margin for the bill forebodes that the bill's passage through the Senate would not be an easy one. Amid the Treasury sell-off, DXY moved lower, further affirming the decoupling of US dollar from UST-driven moves in recent weeks. US dollar's haven allure has appeared to diminish substantially, contradicting received wisdom about buying US dollar, especially vis-a-vis EMFX, into risk of triggers. Over in Asia, central banks eased policy rate across the board last week. PBOC's 10 basis points cut to the 1-year and 5-year loan prime rates was in line with its usual gradualist approach, but also underscored the desire for a stable CNH. Meanwhile, RBA pushed through a dovish 25 basis points cut as members discussed the possibility of a 50 basis points cut amid more balanced risk to inflation and heightened growth risk. While RBA stopped short of promising consecutive cuts, it signaled space to move quickly should disinflation allows it. Bank Indonesia eased by 25 basis points on growth woes, even as it affirmed continued interventions in the markets, suggesting that concerns over rupiah's weakness are still ever present. Notably, loan growth forecast was lowered to 8 to 11% from 11 to 13%, while BI cited the need for lower interest rates to support growth. Growth forecast for 2025 was also narrowed to 4.6 to 5.4% from 4.5 to 5.5%. While BSP governor signaled further cuts ahead, he moderated the extent of easing, seeing only 2 more cuts this year, down from 3 earlier in the month. Meanwhile, President Macron is looking to recalibrate his administration following an underwhelming performance by his allies at the midterm elections. Thailand's Q1 GDP outrun provided further evidence of front-loading activity in the region, but a sharp downturn in inventory with only modest acceleration in manufacturing growth spells of future growth woes. In a reflection of that, 2025 growth forecast was lowered by 1 percentage point. This week, Bank of Korea is expected to ease policy rate by 25 basis points amid growth woes and continued disinflation momentum. Nonetheless, housing prices and household debt ought to act as restraint for overly dovish rhetoric and to temper the pace of easing. Meanwhile, while India's GDP may show some acceleration from 6.2% in Q4 to 6.6% in Q1, the print should be adjusted for front-loading activity. The print is also unlikely to quell RBI's easing bias. All in, EM Asia Central Bank's easing bias amid UST-US dollar decoupling presents latent risk of sharp downside volatility. So, do watch out. With that, we have come to the end of this episode. For more information on the key events for the upcoming week, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market deals, please subscribe to our channel and hit the notification button. Thank you and bye-bye.